And we're coming out of a very volatile time period after last week's surprise move of support in Europe, and then all of a sudden the collapse in the currency. But looking at the crude, Brian, we've had about a $16 sell-off in 2 weeks. Are we at a point where we're going to hold?
Bill, yeah, this sell-off has been absolutely amazing, and it is off of the back of all the concerns about the European debt problems. You know, we can try and figure out what fair value is for crude. I don't know if the market has even known that the whole way up. But at least from this point, one thing that does come to mind is that we seem to have stopped going down, at least on today's lows. It matches up right around this spike low that we had back in early February. And that also matches up with 62% retracement of the rally that we had from our July 2009 lows to the recent highs. So at this point, the trend from the top of the market is down, but the overall long-term trend of crude oil is a market that is going to continue to trend higher. With that in mind, we like to be buying on dips in this market, but I just can't come in here and say with much confidence that we need to start buying right now. For that reason, the trade that we're working right now is a spread in crude oil. And we bought the nearby crude and we sold the second July crude, really just looking for that spread to narrow in the last few days of trading like it did last year. But I'm not going to recommend that anybody step in and be a buyer for crude oil here. Simply the ranges that we're seeing on any given day in crude oil are more than I'm willing to risk on any trade. So until this market calms down a little bit, shows us that it's trying to consolidate and hold tight for a little bit, I have a real hard time recommending anybody buy or sell.
Brian, you've put out some recommendations that have made several $1,000s here in the last few weeks. You've done a good job. Without having a recommendation today at this meeting, how can somebody know you're putting a recommendation out?
If you're going to want to look at our recommendations, really the thing you're going to want to do is look at our research center. All of my commentary about the market and my trade recommendations are on the advisory report. So that's something that you can call in and talk to one of the brokers here and ask for access to that. Or you know, even just try a week trial. Just jump online, sign up for a free trial, and take a look at it. And on top of that, not only will you get my energy recommendations, but you'll also be able to see what we're doing on the livestock, the grain markets, and the softs. So for a 1-week free trial, it's a no-brainer. Now, one of the reasons that we may see this crude market try and hold tight here, based on the support that we had just pointed out, is also we seem to have possibly hit some resistance on the U.S. dollar. We have a little bit of a downtrend that's established here from, these are actually some of the highs we made back in 2003. And we seem to have stopped about a point short of this spike high that we had back in the second quarter of 2009. So with this downtrend here, with the resistance in place, this may be a point here where you could reasonably look to trade a turnaround Tuesday, see if some of these support areas on the crude oil and some of the resistance on the dollar may hold. But this is something where if you're going to play that trade, I would really look to make it a short-term deal. Again, the confidence in the market right now is low, and the trend that we're trading right now in crude is down, and the dollar trend is up. So at this point, you know, if we're going to just stick with the trend, you got to be looking to sell rallies in crude and buy dips in the dollar right now.